All right. Well, good afternoon, everyone, and welcome to today's Learn at Lunch webinar. We will hear from Northwest Area Ag Economist Trent Malachek as he discusses prospects for double cropping this year. If you have questions for Trent, please ask them through the chat box, or you can unmute yourself and ask them through the microphone as well. And if you do want to do the chat window, just click the chat button at the bottom of the screen. We also have more farm management resources on the eFarm Management page, and I will share that link in the chat window as well. And so Trent will be asking for questions throughout as he does his presentation. So feel free to unmute yourself or ask through the chat and tell him, ask him questions as you, there's other things you want to find out about regarding double cropping. So Trent, I will turn it over to you now.
All right, thanks, Brent. So those of you that don't know me, I'm Trent Malachek. I'm the West Area Ag Econ Specialist for Oklahoma State University. Again, like Brent said, please, if you want to ask a question, just unmute yourself. Don't be shy. I'd much rather have that interaction with you and talk back and forth as opposed to Brent will have to read me the chat anyway. I can't even see it on this screen. So if you want your question answered quickly, go ahead and ask it. And at any time, just interrupt me. It's not too formal here. I've got a few slides to talk about. I'll just kind of go over what I think about double cropping in the current sphere of things. You look at crop prices, and if you're in the lending industry or if you're a producer, you know that the high crop prices don't mean much, but we do have some educators here, and we'll kind of try to paint a picture of the situation we have going on. So incredibly high futures prices due to the war in Ukraine, probably somewhat due to the economy and inflation and things like that, where we see those prices going up. But farm inputs have followed, and they've also surpassed the percentage increase in prices. So leave it to an economist to make any budget look bad, but it's very easy to make these budgets not profitable just by looking at average inputs. And I'll show you some double crop budgets that do look profitable, but what you got to consider is, one, how do you assign your fixed costs to that double crop? To what about land rent or the opportunity cost of land? How do you assign that to a double crop? If you're real easy on a double crop budget and you don't put a lot of pressure on it, it's easy to make it look better than it might actually be. And then what are yields going to do? I mean, you look out there, I've been planting some Milo myself here recently, and you can just barely get it to moisture. And then you look at the long range forecast for temperature and water, and it's just like, I don't know what I'm doing out here necessarily. Thinking about that, it's not very good prospects in terms of a moisture situation. And it's always tough, especially here where I'm sitting in north central Oklahoma. We come through July after harvest and think, oh, things are bleak, water's bad. We're really concerned about what's going on. And all of a sudden in July, the rains open up. And again, historically, what can we bear? And we look at our insurance and look at what of our approved yields are and what our guarantees are going to be. And you just try to protect yourself. I haven't had much trouble getting a hold of the chemicals we need to do these crops. There was some talk earlier in the year that there was going to be a shortage of chemicals. And, if you shop around or are willing to go to different brands, usually all of that stuff's available, but it is incredibly expensive. And that's the other thing coming out of harvest here, where we're trying to do burn downs. And again, this webinar might be a week or two late compared to what some people have already accomplished in terms of getting ready to plant, but just kind of looking at this thing as we're right in the thick of it. June 30th, we got the cutoff date for double cropping Milo and soybeans. So we're going to have producers getting out there really quick here to get their full insurance guarantee. And if not, they have until July 15th at discounted rates per day if they go ahead and plant through that time period. Now, that doesn't mean you shouldn't do it. It just means that we're going to be shooting ourselves in the foot from a risk management standpoint as well. Now, the Biden administration has been open to providing assistance, but it's usually been retroactively. So we saw, another risk management program coming out that kind of replaced WIP Plus, and a lot of people got letters about that in the mail, and that was pretty valuable, but that was for losses in the past 2 years, and you had to have crop insurance in order to qualify for the first round of that. So it's very important, in my opinion. The government's been taking a look at these risk management programs, and they've been willing to share that risk. So they're giving preferential treatment to those that bought crop insurance themselves. And then they're going ahead and trying to supplement some of that. So that would be something to think about in the future. If you haven't bought crop insurance in the past on your double crop, you might think about doing it, because they have been showing a tendency for their ad hoc disaster programs to benefit those more that went ahead and purchased crop insurance on their own. All right. So for a good double crop talk, we'll look at wheat first. That makes sense, right? I'll move my camera over here. All right. So just looking at what we're looking at for next year. So if you're thinking about a double crop, it's obviously going to affect the next crop. Very rarely do we plant a summer crop and then have a perfect wheat crop after that. You're going to deplete soil moisture. You're going to deplete nutrients. You're going to plant later in the season. So that all has to come into play. You have to think about the negative effects you'll have on the next wheat crop, especially if you're much west of I-35. I mean, the farther west you go, obviously, the more difficult it gets. Now, for this wheat budget, I don't know what bushels to use anymore. Bushels are all over the place. You see higher, you see lower than 30. I keep putting 30, and these budgets are worthless for anyone but me, because they make sense to me. For other people, they're going to be different. We're just going to talk about some of the cost I've seen on my operation and in my area, and then you have to adjust accordingly. You have to understand that. But at 30 bushels, wheat prices come down. Commodity prices have been crashing hard the last few weeks. And that's been very frustrating, because farm inputs aren't necessarily going to follow that quickly. But we have revenue at $285 an acre there for wheat. And then just your cost, wheat seed, bushel and a half at $15 per bushel. I don't know if seed wheat's going to be that high, but if it is, you got $22.50 there. Machinery and fuel. Okay, so I'll just highlight some things. Machinery and fuel, not quite sure. Labor, not quite sure. Custom hire, all highly dependent on the individual producer. So those numbers are there, but take them with a grain of salt, because it's hard to know exactly what that's going to be for the individual producer. What's easier to figure out are things like herbicide and pesticide. Now, $40 probably gets you two really strong passes of a herbicide. You can get glyphosate, generic glyphosate, $40 to $45 a gallon. And then if you're looking at some kind of a broadleaf weed control, your typical dicambas or 2,4-Ds, or maybe a mixture of both, and some of those chemicals, you're looking at something like $35 a gallon in tote form. So you're talking about, bigger load purchases, not just in bottles. But it doesn't take long to make one pass cost $20 if you're going after drought stressed weeds, trying to put on higher rates to get kills on that, which we haven't seen very good luck getting kills on those drought stressed weeds, even at a quart per acre of both glyphosate and brash. So keep that in mind. We're spending a lot of money trying to get these burn downs done before double crop, and we're still having trouble getting those weeds completely killed. So I just put, say, $20 for a burn down and $20 for whether you pick that for a pre-emerge, which pre-emerge have to be reined in. What are our moisture prospects? Not that good. I'm not a huge fan of pre-emerges in that situation, but the agronomist would hate me for saying that. So agronomist is always going to tell you to put on pre-emerge, and whenever you get a random shower 2 days after you planted, that works out really well. But just with the long-term prospects, you might want to save some of that money for some kind of in-season herbicide control. So I just provided another $20 there. So I doubled that single season pass to 40, and that way that gives you some room for making more herbicide applications. Fungicide, I don't know, $10 there. Crop insurance, $13. That depends on the person and their yield guarantee and the price of wheat. Whenever price is tracked, going down through there, you get to total variable cost of $341 using $45 harvest and $45 cash lease. Point is, even at $9.50 wheat, I can make this thing lose $56, and I don't think I'm being unfair. So moving forward to our soybean budget for 2022. Got quite a bit of beans out there already that were planted early. Now, I don't know how many beans. I know there are some beans going out double crop, but I think that's going to be more muted. I know I changed directions myself. I thought I was going to plant beans for a double crop, but I decided to switch over to Milo because of the moisture situation. Likely to see some more of that from other people. But at 20 bushels at $11 per bushel for beans, we're looking at $220 of total revenue. Soybean seed, 120,000 plant pop at $14 per, I should have changed that number. That's actually a $50 a unit. That should be $50 a unit there. But that ends up being $43 an acre for seed at 120,000 seeds. There'll be people who plant less than that, but double crop again, usually you maximize your yield somewhere between 100 and 120,000 plant pop. And if you're planting into a dry seed bed, your emergence is not going to be 100%. So you're thinking about trying to plant more seeds to make up for poor emergence, trying to actually get a stand between 100 and 120,000 seed or plants. You're going to have to plant a little bit thicker. So I'm using 43 there. And then again, as I talked about in the wheat budget, you got these different things, herbicide and pesticide. With beans, we're going to have a good burn down. Dicamba beans, the dicamba application has to be done before July 1st, and then it becomes off label. For enlist beans, if you're looking at 2,4-D choline tolerant beans, they'll be able to spray later on into the year. So that'd probably be a better option for producers if they look at enlist in terms of longer season control for the in-crop application. But again, I just left it at 40. It's going to be more for some people, less for others. Crop insurance, labor, things like that. Fertilizer. This is one of the big things that we get to talk about when it comes to double crop, because like I applied 140 pounds of nitrogen to my wheat crop, made something like 35 or 34 and 37 bushel. And on both of those farms, I still had like 32 to 37 pounds of nitrogen in the top 6 inches. Now there's probably more down deeper, but that's, we can't get a soil probe in incredibly deep. But point being, there's quite a bit of nitrogen sitting out there. That was another reason why I didn't want to go to soybeans after this wheat crop. The wheat crop wasn't as good as we were hoping. So we had some residual nitrogen. I didn't want a whole bunch of residual nitrogen out there for soybeans in a drought stress situation, because they will stay vegetative longer and they won't want to go reproductive, and that could be a negative. So I decided to go with Milo in that situation because of that. All right, so fertilizer at 25, I'm just assuming some, I don't know, phosphorus or potash or whatever you need there. That number might be 0 for a lot of producers. They might just say, I'm not putting out any fertilizer, so they can take that out. Harvest, all depends on yield, of course. I put $35 an acre in there. That might be low. But then land and cash lease, I leave it at 0. I don't know. Do we want to split that in half? Do we want to say it's 0? It kind of probably depends on the wheat crop you had. If the wheat crop was good enough to pay for the cash lease, then we're probably leaving it 0. If you had a pretty poor wheat crop and you're still trying to pay some bills, that land number needs to increase, and you need to be cognizant of that. But with a 20 bushel bean yield and $184 in expenses and double crop, I'm looking at a $36 an acre, some type of profit. I don't know if that's true profit or some kind of return to management. It's most likely going to be a return to management and return to equipment, because our labor's $5 an acre. We do have a little custom hire in there. So it's pretty encompassing budget. That would be pretty close to a true profit. Any questions so far on beans or wheat before I get started in Milo? I'll wait a few seconds here. If anybody wants to unmute themselves or type in the chat, Brent will let me know if there's any chat messages.
Trent, on your bushel estimate there for soybeans, is that pretty common? Is that an average? What is that?
That's a great question. Looking at my own operation in the last 5 years, I've had a range of 3 bushel to 48. So it's so variable depending on rain. If you look at my insurance guarantee is somewhere around 14 bushels after I look at like a 75% revenue product. So I use 20. In a really drought stressed year, or when you plant really late, that can be tough to achieve. If you get 4 or 5 inches of rain through the summer, 20 bushel would be pretty easy to achieve. So it's all going to be about what shower you hit and what shower comes over the top of you. That's a great question. That brings me to a point I didn't necessarily make earlier, is I don't know what's fair when it comes to yield. It's hard to compare these crops. It's a lot. The water it takes to raise 20 bushel soybeans will go a long way with sesame, in terms of making a high yield. So it's sometimes the budgets don't look necessarily fair, but I'm kind of real hard on soybeans this year because of low moisture and the hot temperatures we've already experienced. I'm not convinced that we're going to have great soybean growing conditions, but that could all change next week. So it's all about the long-term outlooks. Any other questions real fast? All right, we'll keep moving. So 2022 Milo budget, I used 50 bushels. For some people, that's low. For some people, they have a real hard time capturing that. Now, it's good that Brian's on the call here because Milo has a lot of different options in terms of making money outside of its grain value. And that's one of the reasons I like it in this situation. I'm sure all of you know that we're low on hay stocks. So that's something to be considering as we move into the summer months. If we're running out of hay and we don't have a lot of grass prospects and we do have some moisture to grow a double crop, looking at Milo, 50 bushel yield goal at $6 a bushel is $300. So pretty good revenue there. Milo seed, I'm thinking 30,000 plant pop at a, I don't think I changed any of those correctly. So Milo is going to be $180 a bag is what I paid for it. And I've heard as high as $220 a bag. And I use the 180, the cheapest that I've seen. So 30,000 plant pop, $180 a bag for seed, and it was 14,000 seeds per bag. So I did all the math and came out with it was about $8 an acre to plant Milo, which in most budgets I would use 10. So $8 to $10 an acre, pretty cheap on seed compared to soybeans. But soybeans a legume, you don't have to pay for nitrogen. Milo, you do have to pay for nitrogen. So we'll get to that. Left most of the stuff exactly the same, whether it's fair or not. Again, those are such variable costs that I don't like. I wanted to keep stuff a little bit similar across these budgets. Fertilizer at 75. If you're looking at 50 bushel Milo, you're probably going to need something like 50 pounds of actual nitrogen to grow that crop. So leaving $25 for phosphorus just as a blanket number, consistent across the budgets, and then adding in $50 for that nitrogen, you get 75. A lot of people will be like me and not put down any nitrogen until we see if we get a stand. If we do get a stand, we can top dress later. But in the moment, with 30 pounds in the top 6 inches, I'm just running with it. I'm just going to plant it. And in my mind, at the very least, that's enough to make a hay crop that may not be high in nitrates. But that's something to be considering as well. As we move forward, if we have failed Milo stands, there is an opportunity to make that into hay, but we've got to be real careful with our nitrate situation. So that would be a reason not to go out with high rates of nitrogen early on, especially if you have some in the soil to kind of save yourself in case you need to make hay out of it. But that hay has a chance to be fairly valuable. And the other thing is, if we have kind of a poor grain yield, if Milo does make it to maturity and we have a poor grain yield, you're going to have stalks out there, and stalks are worth something in a situation where we don't have any hay. Being able to graze those stalks could be fairly valuable. And out west, where they do this a lot, or even under irrigation, sometimes in poor grain price years, the stalks have been worth nearly as much as the grain has in terms of grazing rights. So it's definitely something to consider if you are worried about feed for your cattle. But in this situation, Milo looks fantastic if you can raise 50 bushel wheat at $91 a profit. Of course, we don't have any land value in there. I'm probably really skimping on expenses here, and be aware of that. And I might be a little optimistic on 50 bushel yield. 30 and 40 bushel yield in a dry year is probably more common if things don't improve. So it's kind of a single 1 or 2 inch rain event will make or break a summer crop. And that's just how that highly variable it is. But with the Milo, I like the idea of being able to make hay and graze stalks. So that is something there we can go out and scavenge some of that nitrogen we may not have used from the wheat crop if it was poor, take advantage of that. Sesame. Sesame is a lot like Milo in the sense of, I didn't even change the Milo seed there. Apologize. I went in all the seed costs are right for the crops, but I didn't change the slides enough, so I apologize for that. But So 500-pound yield goal for sesame would be considered, that would technically be considered conservative. Now, depending on where you're growing sesame and the situation you're in, that could be difficult to obtain. I'm also going to have producers that come and talk to me and say 500 is way too low. I average 800 to 1,000 pounds. If you're selling that at 60 cents a bushel, you're looking like a genius. It's going to be a really good crop if you can get that accomplished. Even if you're down around 50 cents per bushel for whatever reason, that's not that much of a difference in terms of total revenue. If we're planting 3 pounds, I use $10 a bushel. There's going to, between the two companies that are marketing sesame in this area, they have 2 different seed types. And, just know that the seed can be a little bit higher than this and it can be a little bit lower. I hit it somewhere in the middle. So probably $30 to $45 an acre. If you're running a planter, you can get that sesame seed down to a 1/2 pound to 1 pound per acre. I'm just figuring with a drill, it's hard to get much less than 3 pounds with a drill. So, again, highly variable. You might have some producers that can get sesame planted for $10 an acre, some that might have to pay $45 or $50 an acre, depending on their planting equipment and what it takes to get it metered down lower. Might pay to hire someone with a planter to plant sesame for you if you really want to get those ultra low seeding rates. But I've planted sesame at 1 3/4 to 2 inches deep, and you wouldn't think it was possible for that plant to come out of the ground, but it will not sprout if there's not moisture. So it's another situation where you up your seeding rate, plant it deeper, hope for the best, or plant it shallow at a lower seeding rate, risk getting half a stand. And if it doesn't rain, that's what you'll have is half a stand. So again, producers have to weigh those options and what's important to them. If they want to stand right now and they can put it in moisture, but it has to be a little bit deep in terms of what sesame would like, they're going to have to up that seeding rate considerably to get more seeds helping to push. All right, pretty much the same. Fertilizer is a little less than Milo. Harvest is, I don't know, 35, 45, somewhere in there. It's going to be different for each producer. But again, similar to Milo, pretty good looking crop, pretty good profit potential if you can get that. Sesame looks like the best option as long as you don't have to haul it an hour or 2 away, and consider those situations. If you don't have your own harvesting equipment, if you can hire someone to harvest sesame, you have to have that figured out ahead of time. So there are some hiccups to sesame. It's been having some more pests come into it here recently, so we can't really say that it's pest free. There's definitely some situations where we have to spray pesticide, and then herbicide options are incredibly limited. So you're gonna have to have pretty clean fields to grow sesame. There are options out there for controlling weeds, but either you have to be in the know or work with your agronomist to get that done, because it's not necessarily the easiest thing to do to get those weeds controlled in sesame, and it can be expensive. So we'll go with 79 there. To me, it looks like sesame and Milo is the way to go. There's still going to be soybeans planted, and if we get the rains and we get 30 bushel soybean yield, it looks just as good. But just something to be considering as we move forward. I'm going to run through some charts here real quick, but before I do that, again, I want to open it up if anybody has a question before I move on. I don't want to bore you absolutely to death. That's kind of the background of it. I've been doing a little bit of this myself, so if you have any particular questions, you can ask me, but I'll give that a few seconds here to see if anyone has a question, and I'll move on.
There's still nothing in the chat, or no questions in the chat yet.
All right, we'll move on. So this is a hard red wheat, July of 23 contract. So looking at next year, again, I don't think you can do a double crop without affecting the next year's crop. So it's worth looking at what the value of that next year crop is going to be. And wheat has just been taking it on the nose. I mean, we can draw that green line there, that angled line wherever we want to. The old trend was way up there around 1150. I've dropped the angle of that line way down to match that little run we saw back in February and March. As you see, that line goes across the bottom closes there, just trying to come up with some kind of a trend. But wheat is in free fall right now. And if you want to be honest with yourself, where can it stop or where is it support? It's that red line there. And it has stabilized here at 960. That 950 level has been kind of, I think it's a psychological number, 950, it's an even number. The market found some support. And it's going to be real important what happens here in the next few days, because for one, I think this is probably where wheat needs to be in terms of supply in the world. A lot of that $11 and $12 trade was being scared and wondering what's going to happen. The war in Ukraine is nowhere near over with or stabilized, but there's a lot we don't know about that. And I just saw a story today about Ukrainian farmers destroying harvesting equipment so the Russians couldn't steal their crops. So it's still going to be an important situation to monitor. But as the world reset and readjusts, we may not get back up to 12, depending on what happens. We are cutting wheat. The wheat crop is poor, across the U.S., or maybe not good is a better term, but it was definitely below average in some areas. So that's going to continue to provide support for this market in the fundamental sense. Technically, it's just in free fall and in shambles. We've ruined our technical indicators here. And if you didn't sell at harvest, you're sitting here wondering, what have I done? I messed up. Wheat price is still above 950. Things are still looking pretty good. But watch the next few weeks here, over the next week and into next week, to see if we can get back above 10. I think that's very important. You see that support level up there around 1035, right below 1050, where we saw a low back there at the beginning of May. And that's going to be incredibly important. If we could get back to there, kind of reset, retread the water there and see what's going on, we might be able to salvage this thing. But otherwise, I would consider that we'd be in a new trading area somewhere between 875 and 1050, which is a huge trading area. But this is high prices, high volatility. You're going to see a wide trading range. So we're probably right in the middle of our new channel that we're going to develop. And farmers just have to weigh what they need. If they need the money, it's still pretty valuable. If the market just cratered and we went through 850 there, we would be down around $7.50 to $8. And with current farm inputs, that's a disaster. I don't know if I'm necessarily incredibly interested in pricing a lot of wheat for next year right now. The time to have done that was a month ago. But again, we've seen how bad wheat prices can get. And when we've looked at these high price scenarios in the past, the market can right itself within the year. And by right itself, I mean way back down to lower levels. If something happened where the war in Ukraine, some armistice was made, and we don't necessarily have full-on conflict occurring and trade routes open back up, you're going to see these prices go down. And, Russia isn't going to open back up immediately. The sanctions are going to persist, in my opinion, because, they're punitive sanctions. And that's just, if the war ends, it's not like those sanctions are necessarily going to get lifted. But, opening up Ukraine and shipping channels and getting rid of some of that uncertainty could very quickly affect this market. So keep that in mind. So looking at corn, the free fall in corn isn't necessarily as pronounced as wheat. I don't love this trend line, but I wasn't sure where to draw it. There's original trend line that had it going up above 780, adjust the angle of that down a little bit. We found good support there at 650, which is going to be a good sign for wheat. There's probably more support here in corn than there is in wheat. So if corn can stabilize and trade back up into the $7 range, you'll probably see wheat recover. But again, fairly good prices. But if you're going to be looking at growing Milo, which is why we're looking at corn, the basis for Milo is adjusted off of corn. Kind of the volatility into the future here, we've lost about $1 of value, and my budget reflects that. So still looking pretty good. If you want to contract some of that Milo acres that are going in the ground now, I don't necessarily think it's a bad thing. Just know that there is that opportunity for the price to come up some. So you gotta weigh your options. But I think the downside here, there's some support level there at 625 and more support there at $6. So, if you're willing to gamble with about 60 cents worth of value there, leave it open and just see what happens. But with low moisture prospects, we definitely got to look at our insurance guarantee, look at our guaranteed bushels, and be very careful with forward contracting more than our insurance guarantee. Because, the insurance revenue crop insurance is going to give us the higher price of the part, or whenever we started tracking prices at planting versus harvest time tracking. So we can go ahead and contract up to our insurance guarantee pretty safely and not worry too much about producing the bushels to cover that contract because we have revenue crop insurance. But once you start contracting above that insurance guarantee, you're just open to the market and what it can do. So you might get lucky and prices go down. And if you can't produce the bushels, your contract, you'll make money on it. But if not, if prices go up, you're going to have to buy bushels on the open market to cover that contract if you can't produce it. And it's going to be very costly and add insult to injury. With soybeans, beautiful trend line here. This one was easier to draw. So again, a little bit of hope there. Soybeans crashed with everybody else, but it recovered back up to 14.57. Again, lost $1 of value. Just bam. It punches you in the gut when it happens because you don't even have time to react. Really, you're like, well, I don't want to overreact to a market correction, and then it just goes down again the next day, and then it goes down again the next day. And you're like, when do I make a decision to go ahead and price these beans? And again, a month ago was the answer, but hindsight's fantastic. We do have a little bit of a gap up there around 15.40 to consider. I don't know if it's a big enough gap that the market will trade back to there or not, but it's already showing some pretty good recovery and trading higher. So I'm not unconvinced that we will see $15 here fairly soon. But pretty safe. That $14 level has been tested roughly twice. And market has come back. So that seems now with this new test here for the third time, $14 seems like a pretty firm floor for beans at the moment. So in terms of value, percentage moves and percent value of the entire contract, beans have a lot less risk, in my opinion, than Milo and at least wheat do, because we see a lot lower floor in those two commodities. All right. That's really, Brent, all I had specifically prepared for this. If people have any other questions, I'd be glad to answer them, or any specific questions I didn't cover. But this is how it always is. It's always going to be a pretty high risk maneuver to go this direction. So it's a lot more comfortable decision when we have soil moisture to get planting done. But as it is, it's pretty dry out there.
Thank you, Trent. That was a lot of good information. I still don't see any questions in the chat box yet, but people can also unmute themselves. I did share a link to a survey over the webinar in the chat box if you would help us out by filling that out. And then I also want to tell everyone we have our next scheduled webinar at noon on July 19th, and Rodney Jones will be discussing fall crop opportunities. So that's what we have coming up next. And so Trent and I will stay on for you to ask any other questions you have in the next few minutes.
As we wait, Brent, another thing producers are going to have to consider is whether or not their operating lines can handle some of these crops with the increased expenses, and looking at a double crop. The wheat crop for some people may have put a slight dent in the operating line, but if you're maxing out on your op line and you're having trouble receiving funding, don't necessarily think this is a great opportunity for you, because there's a lot of risk out there and you'll be overextending yourself on your op line and your credit requirements. And then you might be shooting yourself in the foot, so to speak, in terms of trying to get in a fall crop that might be what you're more used to and might be under better moisture conditions. So always be a little bit cautious there.
Well, since I don't see anything else or hear anything else, I think I'll end the webinar. So we will see everyone on July 19th at noon. Thank you for joining us today, and we will see you on the 19th.
All right, thanks, Brent.
You're welcome. Thank you for presenting.